Greetings, everyone. The chairman of the SEC, Securities and Exchanges Commission, Gary Gensler, has spoken recently about three issues regarding to the situation that retail investors find themselves into. The first one is the conflict of interest of the retail trading apps like Robinhood and the others, like Ameritrade, interactive brokers. In Europe is particularly famous, are particularly famous, the Giro and eToro. These apps are becoming more and more popular with this new phenomenon that authorities are watching very carefully of retail trading. More and more people are getting involved into what once was just a thing for very rich people. Now you can start with an account with $200, maybe with $50. And so this popularity has made more people participate to the market and then created a new market of these apps that allow to operate in the international markets. The concerns are regarding to the conflict of interest, as I said, because these apps advertise themselves as no fees trading apps. So many people believe that they are trading or investing paying nothing, maybe paying the withdrawal fees. But actually, the biggest amount of money we pay, every retail investor pays, operating within these apps, is the difference bid ask. So the difference between the price of selling when you buy an asset and the price you buy the asset at, which is so the spread is the money they take from you, which is considerable, especially if depending on the amount you invest with and the number of operations you do. Since they make more money the more you trade, so the more operations you start and close, they want to incentivize that this conflict of interest that pushes them to incentivize you to trade instead of investing. And that's why so many apps have these volatility alerts. Say this stock is going up 10%, this is going down 5%. Is it the moment to buy or sell? They don't make you study the fundamentals or operating within a long-term vision, but most of the time with a short-term vision, because that's where they make most of the money. If you go look at all these trading apps, you see considerable amounts of accounts that are officially open, but they are open with no one still operating. Why? Because when you open an account and you trade so much, especially with no experience, you're doing with no experience something that's more difficult than what people with experience do. Because trading is much more difficult and less profitable than investing statistically. And so people lose their money and then close their accounts. And most of the times you can't actually see how many active accounts with real money in it and people behind them are actually operating. You see the accounts open. That's why a lot of these apps have difficulties into getting into the public markets. Most of them are still private companies. They're not listed on any exchange, not yet. But what you should think of is, how do they make money? Because everyone, to stay on the markets, you have to make money. because otherwise people don't invest in you, and if people don't invest in you, then you don't make any money, and you fail. So you can't stay afloat for so many years without actually making people pay for your service. There's nothing wrong. Let's be clear about this. There's nothing wrong with making people pay. The problem is when people are unaware that they're paying. Is it their fault? They're not making enough research. Surely they're not making enough research. They don't know the tools they're using. And maybe they're also a bit naive. As everyone, I think, when you start, you don't ask yourself a lot of this question. You're very enthusiastic about the fact that you have the opportunity, which is amazing. Let's be clear, which is amazing to get into international public markets and operating on them. But the dark side, which has to be clarified, is this one, and it would make investors and small investors and retail traders more aware of what they do and prevent bad things from happening and a lot of money losses. It would not be a game changer. I do believe that a lot of people will still trade short term, etc. But I think it's important to clarify this subject, because it's a subject that matters, that involves everyone, and more and more people are getting into this. We're talking about millions of people that are operating on these sites and apps, so it is an important matter. The second issue that Gensler raised are SPACs, special purpose acquisition companies. These companies have been around for a while, but have really taken off in 2020, and they're becoming more and more popular. What they do is, being a shell company that's public, that raised an IPO like every other public company, that acquires a private company, making it public. So it's basically an alternative way to make an IPO for a private company. So this private company goes public. Most of the times are companies that have been known for years. They're not public yet. And this SPAC acquires it. And so in the end, you have one public company in the end. This is quite a complicated issue. I don't know it super well, but what Gary Gensler wants to outline here is the fact that investors and official institutions, investment banks, etc., are getting a better deal than retail investors, and because of the moment they get into it, etc. So they want to regulate more about these things to make sure that the markets work in a better way for everyone. I leave you the link in the description of a video titled Deep Dive into SPACs from the ARK Fund channel. It's really great, with two ARK Fund analysts and two specialists of this environment. Third and last issue about market transparency. Gary Gensler and the SEC are working to reduce the time within which the period of time within which an institution or a big investor, private investor, has to communicate to the public a big acquisition. So 5% of more, 5% or more acquisition of a company, a stake in a company. Right now they have 10 days to communicate to the market, and they want to reduce this time so that there's more transparency, and retail investors and others. Here is more about actually the all other markets operators know what's happening. These were the three things that Gary Gensler and the SEC are working about. I really appreciate the work they're doing, because especially Gary Gensler, I watched some hours of videos, especially the course that is done at the MIT about blockchain. He really has this positive vision about capitalism and the markets, and the importance of regulators and public policy to make the markets more efficient. It's not a regulation to control of the state to control what's happening and make sure that some gets more than somebody else, but actually it's about making the markets more efficient than they are. So eliminating some market inefficiencies and not being ideological about the fact that these don't exist, because they do, and make the situation better. And so it's a great work. Let's be updated to this, and let's see you in the next video, and let's leave a comment which feature, which issue you believe it's the most important for you in the comments among these three. Remember to you SPACs, communicating an acquisition of a big stake in a company, and the fees policy and communication policy of trading apps and sites. Goodbye.